What is going on, crypto crew? Get ready to dive headfirst into the most explosive news shaping our digital future. The market is moving at warp speed, and if you're not plugged in, you're missing out. Today, we've got the inside scoop on some game-changing developments that you absolutely cannot afford to miss. We're talking about mind-blowing comparisons of digital transactions to everyday energy use. We're diving deep into the staggering energy footprint of a single Bitcoin transaction, revealing just how much power it consumes compared to an average household. Is this the wake-up call the industry needs, or just another talking point in the ongoing debate? Then, we hit you with the critical price levels that analysts are watching like hawks. A huge sell order has placed Bitcoin in a real danger zone, and we're breaking down the exact numbers that bulls need to hold to keep the momentum going. Plus, we're exploring a significant retracement that might just be a calculated pause in a much larger structural bull market. And finally, get ready for the massive capital shift happening between Bitcoin and Ethereum. We're talking whale-driven strategic reallocations that could redefine the landscape. You don't want to miss these insights. Make sure you smash that like button, subscribe, and hit the notification bell so you never miss an update. The shocking cost of Bitcoin payments. One transaction can power a UK home for 3 weeks. Prepare for a revelation that could fundamentally alter how we perceive digital transactions. A groundbreaking new report has peeled back the layers on the environmental impact of cryptocurrencies, and the findings for Bitcoin are, frankly, staggering. This research asserts that a single Bitcoin transaction consumes an amount of power equivalent to what an average UK home uses over a period of 3 weeks. Think about that for a moment. Your digital payment could be powering a household for nearly a month. While metrics like renewable energy usage in mining and carbon offsets are often discussed, this report zeroes in on electricity costs as the most tangible and reliable gauge of a blockchain's environmental credentials. This isn't a new concern. The environmental footprint of crypto has been a hot-button issue since Bitcoin's inception, often becoming a focal point for regulatory scrutiny and public debate. Many Web3 companies proudly showcase their commitment to sustainability, but quantifying this can be incredibly challenging. That's precisely why this comprehensive study was undertaken, aiming to provide concrete data. The report is particularly scathing towards Bitcoin, using it as a proxy for proof-of-work protocols universally. These systems, by their very nature, demand exponentially more energy than other, more efficient crypto assets. The comparison drawn is stark. One Bitcoin transaction eclipses the energy consumption of an average British household for a 3-week span. It's crucial to understand that raw electricity usage isn't the sole factor. While renewable energy sources are increasingly powering Bitcoin mining operations, coal remains a significant contributor to the global hash rate. Furthermore, many companies tout their carbon offset purchases, but a growing number of scientists express skepticism about the efficacy and reliability of these offsets. This complexity makes assessing Bitcoin's true environmental cost a challenging endeavor. The report identifies a select few cryptocurrencies that can genuinely compete with traditional finance payment platforms like credit cards in terms of efficiency. Solana, Algorand, and Nano are highlighted as frontrunners. The report's author, Paul Holmes, shared a vivid analogy. When I tested these networks myself, it felt like something must be wrong comparing numbers side by side. The difference between sending a Bitcoin transaction and sending one on Solana was like comparing a cross-Atlantic flight to flicking on a light switch. These networks are engineered for maximum efficiency, minimizing electricity usage, while projects like HBAR and Cardano bolster their green credentials with carbon offsets. Objectively verifying their impact remains difficult. This underscores the importance of inherent blockchain efficiency, as demonstrated by Ethereum's transformation. Following the merge in 2022, Ethereum's energy consumption plummeted by over 99%, drastically reducing its environmental impact and highlighting the vast difference between proof-of-work and proof-of-stake mechanisms. Even with this monumental improvement, Ethereum still consumes more carbon than blockchains fundamentally designed for efficiency. In practical terms, Solana stands out as the leading ultralight protocol capable of reliably rivaling the energy usage of traditional finance payment platforms. While Bitcoin undeniably serves many distinct purposes, its environmental cost appears to be a deeply ingrained, perhaps irreparable, characteristic that conscious crypto enthusiasts must acknowledge. Prepare yourself, because the market is about to deliver even more jaw-dropping insights. Next, we're diving into critical price levels that have the crypto world on the edge of its seat. Huge sell order places Bitcoin in danger zone as analyst warns $117,570 critical for bulls. Prepare for a crucial update on Bitcoin's price action, as a significant market event has analysts sounding the alarm. A massive sell order has reportedly entered the market, pushing Bitcoin into what is being described as a danger zone. This development has put a key price level under intense scrutiny, with prominent figures in the finance world closely monitoring its stability. Peter Brandt, a well-respected finance personality and a vocal proponent of Bitcoin, has specifically highlighted a critical threshold that bulls must defend. According to Brandt, the $117,570 mark is absolutely vital for maintaining positive momentum and preventing a significant downturn. The presence of a large sell order suggests a considerable amount of selling pressure, which can quickly overwhelm buying interest and lead to sharp price declines. For Bitcoin to continue its upward trajectory or even maintain its current position, it needs to absorb this selling pressure without a substantial drop below this crucial level. The implications of breaching $117,570 could be far-reaching, potentially triggering further sell-offs as stop-loss orders are activated and market sentiment turns negative. This level isn't just an arbitrary number. It often represents a significant psychological barrier or a key technical resistance support level that has held importance in previous market cycles. Traders and investors will be watching closely to see if Bitcoin can demonstrate resilience by holding above this price point, or if the momentum from the large sell order proves too powerful. The broader market sentiment, investor confidence, and the overall health of the bull market could all be significantly impacted by how Bitcoin navigates this immediate challenge. Understanding the dynamics behind this large sell order and its potential impact on key price levels like $117,570 is paramount for anyone involved in the cryptocurrency space right now. The ability of Bitcoin to overcome this immediate obstacle will be a key indicator of its strength and the underlying conviction of market participants. But the market story doesn't end with sell orders and danger zones. Next, we're exploring a fascinating pause that might signal a much larger trend. Bitcoin's $107K retracement, a calculated pause in a structural bull market. Get ready to analyze a significant market movement that could be interpreted as a strategic recalibration rather than a reversal. Bitcoin has recently experienced a retracement down to the $107,000 level, a move that some analysts are characterizing not as a sign of weakness, but as a calculated pause within a larger, ongoing structural bull market. This perspective suggests that pullbacks are a natural and even healthy part of a sustained upward trend, allowing the market to consolidate, reset, and build energy for the next leg higher. Instead of viewing the dip to $107K as a cause for concern, proponents of this view see it as an opportunity for the market to digest recent gains and potentially attract new buyers at a more favorable price point. The concept of a structural bull market implies that the underlying fundamentals and long-term trend remain robust despite short-term volatility. This means that while prices may fluctuate, the overall direction is still upwards, driven by factors like increasing adoption, institutional interest, and technological advancements. A retracement to $107K, in this context, could be seen as a technical correction, a necessary breather before the market resumes its ascent. It's a sign that the market is not overheating and is instead finding a sustainable path forward. This interpretation hinges on the belief that the forces driving Bitcoin's long-term growth are still in play and have not been fundamentally altered by this recent price adjustment. The ability of Bitcoin to bounce back from this level and continue its upward trajectory will be a key indicator of whether this calculated pause theory holds true. Investors and traders will be closely watching for signs of renewed buying pressure and a potential break above previous resistance levels to confirm this bullish outlook. It's a perspective that encourages patience and a focus on the bigger picture, suggesting that short-term fluctuations are simply part of the journey in a powerful, long-term bull run. But is this a pause, or is something even bigger brewing beneath the surface? Get ready for a massive capital reallocation that's shaking up the crypto world. The Bitcoin to Ethereum capital shift, a whale-driven strategic reallocation. Prepare for a major strategic move that could signal a significant shift in market dynamics. Reports are emerging of a substantial capital reallocation occurring between Bitcoin and Ethereum, with large-scale investors, often referred to as whales, driving this trend. This phenomenon suggests a deliberate and calculated shift in investment strategy, potentially indicating a changing perception of value or future potential between the two leading digital assets. Whales, due to their sheer volume of holdings, can exert considerable influence on market prices and trends. When they move significant amounts of capital, it often signals a broader market sentiment or a strategic pivot that others may follow. The reasons behind such a shift can be multifaceted. It could stem from a belief that Ethereum, perhaps post-merge or due to upcoming upgrades, offers greater short-term or long-term growth potential compared to Bitcoin. Alternatively, it might be a diversification strategy, a way to rebalance portfolios in response to changing market conditions or macroeconomic factors. Some may see Bitcoin as a store of value, while viewing Ethereum as a platform with more utility and application-driven growth prospects. This strategic reallocation isn't just about price fluctuations. It reflects a deeper narrative about the evolving roles and perceived value of different cryptocurrencies in the broader digital asset ecosystem. Observing these whale movements provides valuable insights into where smart money is flowing and what the major players anticipate for the future. It raises questions about market dominance, the potential for altcoins to challenge established leaders, and the overall direction of capital within the crypto space. Understanding the implications of this Bitcoin to Ethereum capital shift is crucial for navigating the current market landscape and anticipating future trends. It's a clear indicator that the market is dynamic, and strategic positioning by major players can significantly influence the trajectory of major digital currencies. And that brings us to the end of our deep dive today. But don't go anywhere, we've got a quick recap and your final call to action coming right up. And that's a wrap on today's Market Movers. We saw a shocking report on Bitcoin transaction energy costs, a critical price level that bulls must defend, a potential pause in a bull market, and a massive whale-driven capital shift between Bitcoin and Ethereum. Stay informed, stay ahead. Don't forget to like this video, subscribe to Bitcoin Bulletin for all your crypto news, and hit that notification bell so you never miss an update. Follow us on all social platforms for more insights. We'll see you in the next one.